The Australian dream is getting further and further away. The Australian dream being you want to buy a house, settle down, get married, have kids, and maybe even have your wife at home. That was the Australian dream, the American dream, and that's no longer possible and something that seems too far away. So we're finding that young people are scared to buy a house, they're scared to get in the market, they're scared to get married and have kids and all this financial pressure because they see that prices are going up around them. Things are getting more expensive. How will I afford groceries? How will I afford nappies and diapers? And how will I, afford all these things? And that's a real concern. And so what I'm here to tell you in this video with my 3 main points is you actually don't need to buy a house young, and you definitely don't need to buy a house right now. And it's actually one of the worst financial moves you could make in this current age, especially for Australians. So what we're seeing with price appreciation in Australian housing market is the median house price in 2015, about 10 years ago, was around $658,000, and it's now $912,000. So it's done about a 38.5%, so not quite a 40% gain in 10 years. Whereas Bitcoin has soared from 591 Aussie dollars in 2015 to $182,000 in 2025. And that's a total gain of 30,700%, with an average annual growth at around 82%, whereas houses were only going up around 3%. So if you look at this, and if you actually really wanted to, if you put $1,000 into Bitcoin in 2015, that would now be worth over $300,000, nearly $360,000, compared to only about $1,385 if you invested in the average Australian home. And that's not including property tax, the hidden rates, the variable interest rates, yada, yada, yada. So what we're seeing is Bitcoin's coming in as a teenage asset, something that's new, a new store of value, something compared to gold, something compared to digital real estate. And it's just destroying everything. And what I mean by that is its price is appreciating at a rate that is outgrowing everything. It's outperforming everything, I should say, as an asset class. And so that's including real estate, which is what we're talking about today. Real estate seems so far away and no chance we could even get a house deposit, a down payment, let alone ever pay it off. Because now we're looking at these Aussie homes, and maybe $1 million home that used to be a dream home 20 years ago was, a 5-6 story place with a pool and a tennis court. And now a $1 million home in Melbourne or Sydney is the almost bare minimum house to not be an absolute derelict place, a adajoey. And so it's really interesting now because Bitcoin's come in and it's obviously outperforming everything, and people are saying that they're too late to that as well. They're too late to real estate, they're too late to Bitcoin. But I'm telling you, yes, you're too late for real estate, and you're not going to get those gains that we've seen, and you're never going to be able to pay off your house at this rate, but you're not too late for Bitcoin. And so Bitcoin still can eat into $900 trillion worth of things in this world. There's $900 trillion worth of things that are trying to be a store of value in this world, and Bitcoin's only $2 trillion. Now real estate is like 350 or 450 trillion worth of those things. And so yeah, it's like maxed out essentially. Bitcoin's only 2 trillion. If it decides to eat only even another 1% or 2% of all those things, it starts to grow rapidly. So yeah, its adoption's extremely low. Like how many houses do you see, and how many people do you know that live in houses compared to how many people own Bitcoin? And that's when you sort of know whether you're early or not. And that's a real basic way to find out. Now, another thing, so yeah, Bitcoin's obviously outperforming real estate. It's something that you should look into. And you're going to get a better gain if you're looking at to just get into the housing market because you think the prices are getting away, and it's a better time because then you can make more money. You can be the one that sells it off to someone later on at a higher price. Well, Bitcoin's actually going to be a better asset to do that. Now, self-custody. With houses, you buy them and you have a variable rate for your mortgage. And so the interest rates can actually affect how much you pay back per week. And if they adjust the interest rates, suddenly you're spending hundreds more each week or each month that you weren't predicting, that you hadn't budgeted for. So now you've got all this financial pressure because suddenly that $100 you had at the end of the week for spending on things like clothes and coffee and movie tickets and things that you enjoy doing, even kids' clothes and things you really need, suddenly it's wiped out because the mortgage repayment has been adjusted. That's super unpredictable, and people don't understand that when they go into the real estate market, especially young people. There's also all these hidden costs. So you have to maintain the plumbing, the insurance, the property tax every year is thousands and thousands of dollars, and they don't tell you about it. So you never really own your place. You're constantly paying tax to someone else. So there's always a bigger person above you that really owns the property that's milking you dry, essentially. And let's say, oh, well, I really want to get renters, they can pay off my mortgage. Like, it sounds so nice in theory. If my mortgage is $550 or $600 a week and I get rent for $550 or $600, then I'm, basically free house. And it's like the renters decide not to show up, decide not to pay, smash a window, smash this, smash that, destroy this. There's all these things you don't know. It's not as predictable as you think. And maybe your mortgage rate goes up it goes to $800 and they're only paying off $500 or $600. So then you got to fork out the rest. Good luck with that. Then you got to pay tax on their rent. So it's not everything's as simple as it seems. Whereas Bitcoin really does go back to the basics. I'm a store of value. I'm money. I can store your value and I can grow it over a long time. The purchasing power of it will be able to buy you more in the future than it can today. Whereas our dollars can't do that, they go down. Housing won't be able to keep up with that long term. And you've also missed the bubble to buy a house at $10,000 that's now worth $1 million. And Bitcoin's just superior in all aspects when it comes to a store of value. And also Bitcoin, you take it off an exchange, you put it in a cold storage offline wallet through a hardware device backed by a 24-word phrase. Then you can destroy the device, called self-custody. You're taking self-responsibility to look after your own money. You can literally destroy the device, and as long as you have the 24 words in your head or written down on titanium or paper, you can get access to that Bitcoin and do what you want with it anywhere in the world at any time. No permission, permissionless cash. Very interesting idea. So it really is just pooling the digital capital into offline mode, and it's just going to grow over time. That's just what it's done for 16 years straight until history starts to break itself. Then you might have an argument, but until then, Bitcoin is predictable money, it is programmable money, and is a superior store of capital, store of value for the long term. It's the best place to put your money right now, and it's superior to real estate. So basically, in that point, Bitcoin avoids all the mortgage debt, the rate shocks, the hidden costs, and the maintenance headaches. And it's just the easiest way to essentially have digital property, digital Manhattan, digital beachfront, scarce land in a digital form. You don't have to worry about weather. You don't have to worry about wars that come blow up your house. You don't have to worry about someone coming and vandalizing your house or something like that, destroying your place, renters not rocking up. Its price will out appreciate every other investment, and it's the easiest thing to look after and keep safe. It essentially has zero maintenance cost. Crazy. It's the best security as well. Don't need security cameras watching it at all cost. Now, scarcity. So Bitcoin, let's start with Bitcoin, is hard capped 21 million coins ever to be created, and that is programmed into its code. It cannot change. That is unfolding time and time again, where Bitcoin is just on track, extremely predictable, and we know exactly how many getting released every day, which is 450 right now, and that will halve every 4 years. So we know it's a deflationary release of the supply. Whereas, and then it's got a cap, so eventually it runs out. Like 2140, no more Bitcoin will ever be mined. So then we actually have a time frame. All right, how many can we get until no more are mined? And then we're just trading with each other, 2140. So we won't live to see that day, but maybe our kids will. Now, whereas Australian property, Australian houses are extremely expendable. The house supply goes up constantly. And so unless you're buying beachfront property, city property, hundreds of acres with a valley and a mountain and a water supply and this and that, you're probably buying as a young Australian a crappy joint that's been around for 30, 40, 50 years that needs renovation, that needs a bit of maintenance. Or you're buying a unit, maybe it's new, but it can be mass produced. It's made out of crap quality. People can literally make 8 of them within, a couple of weeks, couple of months, and just basically print houses. 3D printing's not going to be too far away for houses. And so your house really isn't that desirable or scarce. It's very, you can replicate it and duplicate it as much as you want. How is that a good store of value? If someone can just come along and go, oh, nice house, I'll just go make one in 1 month, copy your exact design, and I'll build it for 100 grand, 150 grand. And I'll sell it to someone for 600, 700 grand, like suck eggs. Like, I'm sorry, but houses aren't as cool as you think or as desirable as you think. Like, they're essentially a bubble right now of price illusion, assuming that these houses, like I'm seeing houses that are 30 years old that are run down with their gutters falling off and their paint jobs looking terrible and their lawn's overgrown and maybe they've got plumbing issues and mold inside and they've done like a 3x in 20 years. It's like, that doesn't mean that that house is worth more than it was when it was built. It's like, that house has actually gotten way worse. Why is the price going up? And that's just because they're printing money. The money's got to go somewhere. Where does it go? Houses. So your house is really not good quality or a good store of value. It's just that you're in this illusionary system that's telling you it is. And so that will all burst and break, and what will be left? Bitcoin has a hard cap supply. 21 million coins ever to be created, no more, no less. And you can't mass produce it. No one can click print Bitcoin, give me extra. I want more than 21 million. No, they can't. So that's what's awesome. Doesn't matter how big your pockets are. Doesn't matter if you're a government, a country, a CEO, someone special. You don't get any more rights than someone like me who's 21, that doesn't have big capital. They can't get a 0% interest rate. So it's really cool. It's just fair game. Like, it is just, as soon as you figure it out, you want to go all in and understand it's a superior store of value. So the main conclusion would be, first, the price appreciation. Bitcoin's going to outperform everything, and that includes houses. Self-custody. You can actually take your own time and energy that you trade for money into Bitcoin into your self-custody, self-responsibility. You're now your own bank. No one can take it away from you. No one can confiscate your Bitcoin. No one can raise the property tax on your Bitcoin. No one can break in and vandalize your Bitcoin. It is the best place to be putting your capital. Houses, can't say the same. So many hidden costs. The government now in Australia wants to say that any profit you make on an Australian home in the future, they don't just want a tax on it, they want all profits. That's like where they're heading, and that's what they're already doing. They're trying to eat into every little thing, and they want every little bit of juice out of your house. It's no longer a good place to store your value. And then finally, scarcity. Yeah, like Bitcoin's hard capped. The house you're probably buying, there's probably another 100 million yet to come for that exact house. So there's nothing special about it. It's not going to be a good store of value over a long period of time, and you're really going to struggle to pay it off. For what? A piece of crap. Whereas Bitcoin, you don't need a full Bitcoin. You can just buy a very, very small percentage. That's another thing with houses. You have to buy a deposit, place down a deposit to buy a whole thing. That's why you're under 600, 700, 800 grand worth of debt, because you can't just buy 60 grand worth. you owe this much, because you're never going to own it until that's paid off. And then even then you still owe money through property taxes and things like that. So it's no self-sovereignty or anything. Like, you're just relying on everyone else, handballing the responsibility to every other person except yourself. Whereas Bitcoin's like, do it yourself, mate. Like, look after your own capital, have some self-responsibility, and protect your capital and your generational wealth for the future. Don't let anyone else take pieces of the pie. Take it all for yourself. Look after yourself and your family. Interesting idea, isn't it? So yeah. Also, just if you really need to buy a house, because obviously Bitcoiners can't just live in a cardboard box on the streets. The idea is that you're putting off the now to enjoy the later. So like, maybe eventually I will end up with a property and a house, even as a Bitcoiner. But what percentage of my Bitcoin stack is it going to cost me? Maybe instead of it costing my whole Bitcoin stack right now for a down payment or a house, maybe later on, 10% of my Bitcoin stack, I can sell it, buy the house either outright or half of it, reduce my mortgage, it's a lot better of a strategy, and I can actually do it, and it's affordable, and it's not going to put me under financial stress, and I can sleep at night. Or I continue to wait in Australia, that's extremely slow with their Bitcoin adoption, for Bitcoin-backed home loans, which I think they're coming in now. I've seen some articles where you can put your Bitcoin up as collateral, and that means you're trusting a third party, so you got to decide what you want to trust. And you can get a mortgage backed by your Bitcoin at a low rate because it's the superior collateral, because it's instant liquid and banks want it. So there you go. You can either loan against it, you can sell it to buy a house. Maybe someone has a really nice scarce property that you really want, and you have some Bitcoin, but they can't get Bitcoin because its prices run away from them. Oh, please, I'll give you this house. I'll give you this property for some of your Bitcoin, just a small percentage, because I need it. I need that Bitcoin. I know where it's headed, and you've got some and I don't. So you trade with them directly, the peer-to-peer. Like, you don't need to always just transfer it back to a bigger system. Maybe we all start peer-to-peer transactions with Bitcoin, and go from there. And I'm already seeing that with some people. They literally transact all over the world, peer-to-peer with just Bitcoin, no Visa, no MasterCard, low transaction fees. No one needs to know about the transaction, and they can buy and sell stuff off people. Very cool. So yeah, just understand, like, this strategy will build financial freedom. You'll benefit from explosive Bitcoin growth. You're going to be along for the ride, the ship that's basically forever sailing. Avoid years of unpredictable mortgage stress. And then you can also still get some property ownership in the future, but instead of owning 10% of a property, maybe you can buy it outright with Bitcoin. So if Bitcoin keeps going up 50% a year for the next 10 years, next 15 years, your little set amount that you're being able to buy over that time might grow into millions of dollars, and you can just buy a house like that. That's what Bitcoin can do for you. That's what it's done for the last 16 years. And if it continues to unfold in that way, and its Bitcoin adoption continues to go up, that's going to be a reality for a lot of Australians that are actually putting off buying real estate, understanding what Bitcoin is, going down the Bitcoin rabbit hole, and buying that instead as a store of value, as an asset, as digital property, digital gold, digital capital. And it's a pretty cool idea. If that's really what I'm saying is true, it's worth having another look. Reach out to me if you need at venturesats@gmail.com, and we can have a chat. I'll give you a free Zoom call, video call, conversation on the phone, or whatever you need. We can talk about it. And yeah, so join in for more videos. I'll be doing some more videos like this, breaking down a bit more of Australian content for you guys. Why maybe you can be putting your superannuation into Bitcoin, your retirement fund into Bitcoin, how it's a superior inheritance, superior money, superior savings, superior spending, everything. So yeah, look into Bitcoin, look into my channel, subscribe, like, leave some comments, leave some questions, and I'll answer them, or even do a video based on your questions. And yeah, cheers guys. Thanks for watching, and yeah, see you later.